You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 12th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those taking their 1-week free trial. Later in the broadcast, Michael will show you exactly how to take the 5-day free trial, no credit card required. It's okay to sign up on a Friday because he'll get your indicators indicating today. You'll have the weekend to get familiar with them. And then on Monday, your trial will actually start, and your 5-day trial will go from Monday through Friday of next week. Okay? And when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for the afternoon broadcast at 12 noon Eastern. That would be this broadcast. Now, let me add that when you take the free trial, as Michael will show you later in the broadcast how to do, you're not just getting access to the live training room. You're getting access to every single resource our passport holders have access to for 5 consecutive trading days. And there's no credit card required. Now, we call it a free trial, but believe me, it ain't free. It takes our time, our energy, our resources, and our attention to you. But for you, it's free because we want you to have a clear head. We want you to focus on everything available to you, everything that you can learn, so that at the end of the 5 days, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Then we'll talk money. Fair enough? All right. So there's 2 different ways to join this afternoon broadcast live. The best way, you only got to do it once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, fill out the 30-second registration form. You're done. Not only will that get you into our platform that very day, but every trading day going forward, you'll get an email about an hour before this broadcast starts. In the email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Now, there's going to be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but you want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN. You already have the YouTube part memorized, right? So all you got to really remember is the CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we're simulcasting in 2 different places. But on our YouTube channel, we archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Now, you're not going to watch them all, obviously. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, year. Watch a little bit, fast forward a little bit. You get the idea. Obviously, the more recent ones are going to be more relative to what's happening in the markets right now, but there's 8 years of recorded history out there for you so that you can feel comfortable that you're dealing with people who are not the here today, gone tomorrow type. We launched in 2005. In case you hadn't noticed, it's 2024. It's been almost 20 years since we first broke the airwaves. And they've never been the same since. All right, enough backpatting. Here's our schedule for the day, as it is every day. Going to start with a daily devotional, word of prayer, a couple news articles. Then we'll get into a recap of the alerts. About 12:45, 12:50, Michael will join us, give us a recap of today's live trading room. Then we'll go live on the TradingView platform, do some live trading for 30 minutes. I'll come back, finish the recap of the alerts if I've not already, and I'll wrap things up with our good word for the day. Now, I'm kind of sad to say this. This is the final day of our devotional topic, The Chosen, Season 4. I've enjoyed this so much. I hope you have too. Today is day 7. Today's scripture is Micah chapter 6, verses 8 and 9, and I'm sharing with you from the Message translation. Starting in verse 8, Micah 6. But he's already made it plain how to live, what to do, what God is looking for in men and women. It's quite simple. Do what is fair and just to your neighbor. Be compassionate and loyal in your love. And don't take yourself too seriously. Take God seriously. Attention! God calls out to the city. If you know what's good for you, you'll listen. So listen, all of you. This is serious business. Again, that was Micah 6, verses 8 and 9, from the Message translation. Now, we've spent the last 6 days talking a lot about Jesus. Who he is, what he did. But what do you want from Jesus? All 4 seasons of The Chosen have shown that Shmuel can't wait for the Son of Man to arrive as God's anointed king. He's excited to see God revealed everywhere. And he envisions God's kingdom becoming the most powerful on earth. And with this power, the Son of Man, the King, will surely drive out those who oppose God and usher in an age of justice and prosperity. What's not to like? It sounds like popular religious hope today. Longing for a sovereign warrior. A God who will establish justice and peace by violently destroying those who oppose him. Jesus never harmed anyone. His power has nothing to do with violence against people. In one scene from The Chosen, Shmuel struggles to differentiate between popular ideas of power and true divine power. We have to wrestle with this same thing today. What Jesus calls strong or glorious often seems insignificant or maybe even weak to us. Jesus tells Shmuel that he's missed the point of the scriptures if he's waiting for God to kill his enemies. Wielding death and domination is the way of the world. The power of chaos, often depicted as a snake or dragon in the scriptures. It is not the way of the Messiah, portrayed in scripture as a lamb. When examining the whole biblical story, we see a God of mercy who walks humbly, shows compassion, and offers healing. That's what real glory looks like. God's glory is strong, so powerful that it will eventually restore everything and drive evil out of all creation. We witness this glory when we see one person caring for another. We embrace God's kingdom and fight darkness with glorious strength when we love, forgive, and share our resources, even through seemingly weak or insignificant actions like offering water to a thirsty neighbor. Jesus tells religious experts like Shmuel, and us too, that every instruction from God has been aiming to form us into people who embody His way of powerful living. The Son of Man, the glorious anointed King sent by God to set things right, says there's one undeniable way for others to see that God is the true King over creation: our love for one another. I want you to reflect on a couple things now that this devotion has come to an end. We'll pick up a new topic on Monday. Considering this moment with Shmuel and Jesus, do you see any connections to your own world or experience with religious belief? How would you compare Shmuel's expectations about what God will do to heal the world, popular expectations about God today? What thoughts or feelings emerge when you hear Jesus saying that the true power of God is seen in something like a small act of generosity? Rather than seeing the downfall or death of those who oppose God as glorious, what would it look like to embrace Jesus' understanding of glory in our day-to-day lives? Join me in a word of prayer. Heavenly Father, we come before you today with humble hearts, each of us seeking to walk in your ways. Your word in Micah 6 reminds us to act justly, love mercy, and walk humbly with you. Help us to embody these principles in our daily lives. Guide us to live with integrity, to always show compassion to others, and to forever remain humble before you. And Lord, grant us the wisdom to hear your call and give us the courage to follow it. In all that we do, may we reflect your love and grace. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. And happy Friday. Everybody's been working for the weekend, and by golly, here it is. Hope you'll do something special with yours. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow's up 317 points. The Nasdaq's up 143. S&P 500 is up 40. The Russell 2000 knocking it out of the park again today, up 25 points, which is 1.25%. Now the Dow is up almost 1%, and the Nasdaq and the S&P aren't too far behind. In the commodity basket, crude oil down 14 cents, trading 82.48 last. Gold down $3, trading 24.18 last. Silver down 47 cents, trading 31.19 last, or down $2,500 per contract traded. In the Asian markets at the close, The Nikkei dropped. Hang on to your hat. 1,033 points. 2.5%. Shanghai gained almost a point. The Hang Seng gained 461, which is over 2.5%. And in the European markets at the close, FTSE up 29, the DAX up 213, which is well over 1%. The CAC up 97, which for the CAC, that's a gain of over 1.25%. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a rock solid Radio Friday here in the US of A. Let's go to the news. What's going on? Why are these markets so bullish today? Wholesale prices in the United States rose by a larger than expected 2.6% last month from a year earlier, a sign that some inflation pressures remain high. The increase, the sharpest year-over-year increase since March of 2023, comes at a time when other price indicators are showing that inflation has continued to ease. Which begs the question, who are you going to believe? I guess you're going to believe the lady at the checkout counter at the grocery store, or the man. You got to pump your own gas these days, so. The Labor Department said today that its Producer Price Index, which tracks inflation before it reaches consumers, rose 0.2% from May to June after being unchanged the month before. Now, of course, that excludes food and energy prices because, heck, we don't use any of those, right? Which tend to bounce around from month to month. So-called core wholesale prices increased 0.4% from May and 3% from June of 2023. U.S. consumer sentiment. Unexpectedly. Really? They actually typed the word unexpectedly. Declined to the lowest level in 8 months in early July as high prices continue to weigh on Americans' views of their finances and the economy. The sentiment index fell to 66 in July from 68.2, according to the preliminary reading from the University of Michigan. The median estimate in a Bloomberg survey of economists called for a slight increase to 68.5. I wonder if those economists are the Nobel laureates that say Bidenomics is working. Consumer expectations for inflation over the next year fell for a second month to 2.9%, according to the data. They saw costs rising at an annual rate of 2.9% over the next 5 to 10 years, also edging down from the prior month. Despite expecting inflation to ease, consumers remain vociferously frustrated at the persistence of high prices. Now, the other day, our president said in public on a microphone, he said, "Inflation is dropping. I don't understand why prices are still so high." Meditate on that for a day. Almost half of consumers spontaneously expressed complaints that high prices are eroding their living standards, matching the all-time high reached 2 years ago. Now, let's Stocks are ending the week on a positive note as the latest economic data reinforced bets the Federal Reserve will cut rates in September. About 90% of the shares in the S&P 500 rose Friday as the index reclaimed its 5,600 mark after a slide yesterday. Tech rebounded, though smaller firms continued to outperform megacaps. Banks got hit at the start of the U.S. earnings season, with results from Wells Fargo, JP Morgan, and Citigroup failing to fuel industry momentum. Equity traders brushed off a weak reading on consumer sentiment to focus on prospects for rate cuts that could ultimately benefit corporate America. Data also showed producer prices climbed slightly more than forecast. We already said that. But categories used to calculate the Fed's preferred inflation measure, the Personal Consumption Expenditure Price Index, weren't so bad. The S&P 500 extended this week's advance. The NASDAQ 100 rose 1%. The Dow climbed back above 40,000. Nvidia Corp led gains in big tech. Tesla rallied today after tumbling over 8%. And the Federal Communications Commission said it was investigating a massive hack of AT&T customer data. I've already notified everyone in our Breeze channel. That's our own private social media channel. As soon as I got that news this morning, guys, I put it out there for you, just in case you're an AT&T customer. All right, let's do oil. Oil climbed for a third day as key market metrics flashed signs of stronger demand and traders gauged the outlook for interest rates. West Texas Intermediate climbed above 83 a barrel and is en route for its fifth straight weekly gain, the longest such streak in almost a year. Meanwhile, the premium for WTI's front month futures, which is what we trade over the next contract, known as the prompt spread, reached the highest since October, indicating tighter supplies. You know that's coming to the gas pump near you. And the FCC, the Federal Communications Commission, said it is investigating a massive hack of AT&T customer data. Now, this is going to blow your mind. What do you think they got? Your name? Your email address? Maybe your phone number? No. They got records of every call you made and every text you sent from nearly every one of their mobile phone users for a 6-month period in 2022. One of the biggest breaches of private communications data in recent memory. If AT&T cannot shore up their data, what in the world are us normal people supposed to do? I don't know if those of you that were tuned in at the beginning of the broadcast, but did you see that thing keep popping up? Trying to get me to log into my Microsoft account, which A, I don't want, B, I don't need, C, I don't care about. Yesterday, our good word for the day, I preached about anger. My wife and I were driving to dinner last night, and I made the mistake of checking my email on the drive. She was driving. 4 emails in a row of 4 different companies, 4 different accounts where somebody had tried, and in one case succeeded, to hack into my account. Why? I'm not famous. Not as pretty as I once was. I don't even have as much money as I once had because I gave most of it away. You got to be careful, guys. I see these commercials for PC-Matic. I don't know if that's the answer. My internet provider, Cox Communications, gave me free the other day a special malware block thing that's supposed to block all malware before it even hits my router. Well, I got to call them back today because I don't think it's working. But that's my problem, and I'll deal with it accordingly. Now, this morning, Valerie did a recap at 8:30 a.m. Eastern. We're in week 310. Over the last 310 weeks, we've issued over 17,000 individual handcrafted alerts. She has since done a new recap, but I haven't had a chance to format it for the screen. So when Michael is done with his part today, I'll show you the updated recap. But at the time Valerie did the recap this morning, since the markets opened last Sunday night at 6 p.m. Eastern, we had issued 62 total alerts. 6 never triggered. We're still waiting on the outcome of 13. That gave us 43 actionable alerts, of which 7 or 16% would have been stopped out based on market structure and a very simple process that I teach all of our passport holders in their one-on-one mentoring sessions. Now, over the last 310 weeks and over 17,000 alerts, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again based on market structure and that very simple process I teach all of our passport holders. A few weeks ago we had 0%. It might be the first time that ever happened. I don't know. That was pretty sweet. The average has been over 310 weeks, 20% or less. Now the logic alerts can come out at 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. The logic alerts give you an entry price, an initial target designed to help you get your goal for the day, and then often additional targets and a final trade to target. I use those logic alerts to teach you how to read the chart so that you learn. When you start school, you got to learn how to read so that you can learn all the other subjects. Reading is the first subject because until you can read, all those other textbooks are just gibberish, right? Well, in the financial markets, there's no words or sentences or paragraphs. There's charts with candles and bars and indicators and oscillators and kitchen sinks sometimes. Not us, but some places. So I use the logic alerts to teach you how to read the chart. Now, Logic 247 is not just E-minis, it's also crude, gold, silver, euro, and bonds. And again, before the end of the broadcast, I will share the updated alert with you, or the updated recap. Whether it's better or worse, doesn't matter. It's the truth about trading. Now, 310 weeks is a very long time. But way before Logic 247, we rolled out our original alert service, Concierge Trade Alerts. They're a little bit different. They don't come out around the clock. They're posted shortly after the Globex Open each evening. We all know today's the Friday session, but some people don't know that the Friday session began last night at 6 p.m. Eastern. I was Johnny on the spot last night. It's usually 6:15, 6:20, 6:30, sometimes later. But I happened to be at my desk, and I was in the right frame of mind, and got them out What time did they actually post? Yeah, that's Pacific time because I'm on Pacific time. That's how Telegram works. Telegram reads the computer on your clock. So if you're in the Midwest, it's going to reflect that time down here. If you're on the East Coast, it's going to say 6 p.m. Eastern. Okay. Now, every one of our members and trial members had all of these targets last night, right at the open. The first thing you do when this report comes out, go to the 30-minute charts of the markets you actually trade. Make a note where price is at this time. It's always going to be between these two numbers. Then draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is simply the green line you see on my charts. It stands for bull, bear, cross. If price crosses above the green line, I'm bullish and anticipate higher prices. If price crosses below the green line, I'm bearish and anticipate lower prices. Now, the BBC is always relative to whatever time frame you put it on. You can put it on a daily, a weekly, a monthly, a 30-minute, a 5-minute, a tick chart, a range chart, but when it comes to the alerts, it's always a 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago, and if it ain't broke, leave it alone. Now, here's where it gets interesting. Remember when I was training you with the logic alerts, how to read the chart? I was giving you the entry and the initial target and the other targets. But once you graduate from logic, CTAs, you get to look left yourself to find the entry, to find the targets. You see, we teach you how to trade. These alerts are not for you to trade so you don't have to learn how to trade. These alerts are designed so that you can learn how to trade. If your goal is to trade for a living, it's never going to happen as long as you're depending upon somebody else to tell you when to get in and when to get out. You got to be able to read that chart and instinctively know what the next high probability move is. Are you going to be right 100% of the time? No. No professional trader is. And they certainly don't waste time and energy buying stuff off the internet to improve their edge. They understand getting stopped out is as much a part of life, or is as much a part of trading as breathing is a part of life. So just know you're going to get stopped out. Getting stopped out is not the problem. How you react to getting stopped out, that's the problem. In the morning in the live training room, you see Michael get stopped out all the time. Do you hear him get upset? Angry? No. Because he knows another opportunity will come along. And he knows he has a definable edge, a mechanical rule set that has proven itself over the years. Also, once you graduate to the CTAs, you're going to learn how price behaves at a weekly trading zone. This is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price gets above the 30-minute BBC, it's trying to reach the weekly zone above. If price gets below the 30-minute BBC, it's trying to reach the weekly zone below. We publish the zones Monday morning at 6:15 a.m. Eastern. once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members every week since December 14th of 2009. We're closing in on our 15-year anniversary. Just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. How simple? Let me show you. Yesterday, which way was the wind blowing? It's like it was a southerly direction. Now, last night in the workshop, where did I tell you to expect to find support? At the 38% fib extension. This morning, where did I tell you to expect resistance? At the 62% fib extension. And then the high of yesterday, which is now the new all-time historic high, 5707.75. So on Wednesday, institutional traders were buying. Yesterday, institutional buyers were selling. Today, institutional buyers, traders, are buying. You see, the purpose of looking at a daily chart is not to trade the daily chart, but to gather information. You see, institutional traders, they trade in such incredible size that they literally move price. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it a part of your daily routine to spend 2 minutes with the daily chart of whatever it is you trade before you start trading on your smaller time frames, I believe you'll see your results improve over time. I mean, think about it. Institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it's all about account size. So in doing what I'm asking you to do, or suggesting you do, you're literally looking over the shoulder of the traders that move price. All you have to do is do what they're doing long enough to get your goal for the day and have the discipline, put the mouse away. All right. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Now, this just says 5627, but everyone who's a member knows that the zone is 27/28. So when we came down yesterday, we didn't quite get to it, but that's okay. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. But 70% of the time, when price encounters a zone, it's going to consolidate. 20% of the time, you're going to get rejection. 10% of the time, the slice. What's the slice? On the 30-minute chart, this candle sliced through the zone like it wasn't even there. When it ran out of steam, it retraced to the zone it sliced through and continued in the direction of the slice. So only 3 things happen at a weekly trading zone. With me? On the Dow, here's where we opened last night. Price was above the VBC, so what do we expect? Higher prices. This leg here was enough to give you a goal for the day. Price always reverts to the mean. Now the pullback holds more often than it doesn't. Now when I say price reverts to the mean, in our case the mean is green and we call it the BBC. Bull bear cross. Price crosses below it, we're bearish. When price crosses above it, we're bullish. Pretty simple. Pullback held, pullback held, the pullback held, the pullback held, the pullback held, the pullback held. We spiked it all the way down to here off that news this morning. And look where price stopped. Right at this low from yesterday. This isn't rocket science, folks. You just need somebody to teach you how to do the job. By the time the 30-minute candle closed, we were back above. This was a huge red candle. But by the time the 30-minute candle ended, we were way back up here at the long target. We've now overcome the highest weekly trading zone. Is that a rare occurrence? Kinda. I mean, we're talking almost 15 years of weekly trading zones. So have we had a handful or two of weeks where we close above the highest zone or below the lowest zone? Yes. Very few things in the world of trading are 100%. But does it happen more often than not that we close inside of the zones? You better believe it. 9 out of 10. Now, I want you to look at what's happening here. This black step line. See how we had the perfect stack on the way up? Price, step line, blue and climbing, BBC. But now we've started to consolidate. We've run into trouble, or resistance, or profit taking. And so as the market consolidates, this black step line is attempting to cross blue and climbing. So as long as you have this picture, price, step line, blue and climbing, no reason to get out of the trade. Unless you're just getting your goal for the day, which is the smartest thing to do. But I know some of you got to swing for the fences. When this black step line crosses blue and climbing, you should then expect price to retrace back to the BBC. So we came a little shy hitting the short target. We certainly hit the long target several times. Remember, you don't have to trade every market, and you don't have to trade every move. You just need to get your goal for the day and have the discipline to put the mouse away. And each profitable day of $100 per contract will enable you to add a second contract with profit you earn in the market, and then a third, and then a fourth, and then a fifth. Last January, Michael started with one contract just to prove the 24/20 blueprint theory, which we've preached since the beginning. But we decided to do it live in real time. He's now on contract number 19. So the 2 points in the S&P, for example, that used to make him $100 a day, those same 2 points now make him $1,900 a day. You got to show up. You got to do the work. You got to ask the questions. You got to follow the rules. The step line crossed blue and climbing, and look what happened on the Russell. I mean, here's where we opened last night, and we popped right up. Got your goal for the day early. Hit the long target. So we get this big leg, and then that news comes out, and we get a retracement. But look where that 30-minute candle closed. This was red all the way down. But by the time the 30 minutes was up, the red was gone. All you had was wick. Price was up here. We then pull back to the BBC again. The pullback holds once again. This held. You're like, wait a minute, that didn't hold. Price went way down there. It spiked it. But trust me, it held. Now prices pull back to the BBC. Now, this is an important inflection point, Because you look up here at blue and climbing, not only has the step line crossed, indicating the pullback, but you see how blue and climbing is starting to hook down? Okay, if that turns to red and falling, then there's a lesser chance that this pullback is going to hold. So what do? Wait. NQ. Open right at the zone. Consolidated. Dropped enough to get your goal for the day. Nothing too exciting. Support. Now that support right there, where'd it come from? Yesterday. Like I said, it's not rocket science. But you do need somebody to show you these things. Support sends us up to resistance, which sends us down to support, which sends us up to resistance. All right, guys, we'll pick up where we left off. When I come back, Michael's going to give us a recap of the live training room. We're going to trade live on TradingView for 30 minutes. I'll come back, finish the recap of the alerts, and close out the week with our good word for the day. Looks good.
All right, here we go. Good afternoon, everyone. Today is Friday, the 12th day of July, 2024. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com and click on the purple box right here. Now, I did do this last night. When you click on that purple box, it should bring you, let me refresh this page just to make sure. When you click on the purple box, it should bring you to this page where, there it is, you can register for next week. All that we ask for in here is your first name, your last name, your email, your phone number. Fill out all these little drop downs. Give us your NinjaTrader machine ID if you have one, or give us your TradingView login ID right there if you have one. Hit the register button. All right, once you do that, you send all the information that you need to get into the room in the morning, and we will know that you gave us that information so we can enable the indicator set for you. Okay. Okay. I was just thinking something else. Let's get into the spreadsheet today. All right, so we had a really good day today. It was our best day since January, actually. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. This morning, the 12th day of July, 2024, made 235 ticks on the NQ. We lost 20 on the Russell, made 24 on the YM, and 1 on the ES. That puts it 12:07.5 on the morning session. Today, it took 7 minutes and 1 trade to get to the goal for the day. Again, keeping it into these numbers under double digits. So far this month, this is our business day, 9th business day, almost 2 business weeks. Well, we had the holidays, so it is 2 business weeks. Every day so far this month, under double digits in minutes and in trades, getting the goal for the day. That's unusual. It's unusual. It's great, but it's unusual. It's really going to make these numbers down here go up significantly. 9 days ago, this was under 6,000, and now it's up to $6,475 an hour. So working our way down to that. We took 7 minutes and 1 trade to get to $1,900, so we got exactly 20 ticks on that first trade. Got us to $1,900. We took a total of 29 trades this morning. That's a lot of trades. I haven't had 29 trades in a while. Well, right here we had 37 trades back in May, on one day back in May, at the beginning of May. So anyway, on the month we're at $3,872 over 9 business days, averaging $430 per contract per morning session. On the year, we're at $50,957. That's over 129 business days, averaging $395 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day and add 1 contract per month, that means you start out with 1 contract, you earn $2,000 per month per contract, and add another contract. So far this year, you'd be averaging $1,481 an hour. You'd be on your 7th contract and averaging $1,481 an hour. If you started in January of last year, like I did, so far this year, you'd be averaging $6,475 an hour. You'd only had to work 44.6 hours so far this year and be averaging $6,475 an hour. All right, and that's it. All right, so let's get into the actual trades now. We had just a few trades on the Russell. Most of our trades were on, we had a few on the Russell, 2 on the ES. Most of the trades were on the YM and the NQ. Still dealing with the symptoms. On the YM, we'll start out with that one. All right, we had quite a few trades on the YM today, and it gave us some good opportunities. And unfortunately, we were able to take advantage of them. Starting here, our very first trade on the YM was right in here. We picked up 20 ticks on that trade. That's where we got the goal for the day, right there. Now I got it on the pullback in here, so I didn't get, I didn't get the purple arrow right here at the top of it. I got on the pullback a little bit and kept us in it all the way through here. That's where we got the 20 ticks on it. All right, I didn't get that one. I took a break-even trade in there. I stopped out on that one. That put us back down to 10. Then I had a break-even trade there, a break-even trade there, break-even trade there. No trades in there. Then we had a +4 to get us to 14 and a +10 to get us to 24. And I believe that is where we ended up. We had one more break-even trade there. I believe that's where we ended up. We had a blue arrow there that worked out, blue arrow there that worked out, and that is it. That brings us to where we are right now, our morning session. Okay. And the Russell, let's take a peek at the Russell. Go back to the beginning on this. Russell kind of whooped me today. Though I only had a couple of trades, I stopped out on both of them. Go back to the beginning here. Now, we didn't get anything here, and my data, for some reason this morning, was kind of choking right at the beginning, and it kept giving me all those kind of stripes and stuff. But anyway, we stopped out on this, so -10. And then I think we had a break even, and then we had another stop out. Nope, we hadn't. I did not register a win. I don't think that's supposed to be a win. I think that's supposed to be a stop out. Yeah, I think that right there should be red. We stopped out on that, and then we had a break even right here on that one. And that was it that we did for the Russell today. Now, during the break and even before the break, you can see there's some nice blue arrow trades in here that I didn't get. One here that would have stopped you out. One here that would have given it right back. That was a Russell this morning. On the ES. Now, those of you guys that are in here right now, you may have seen yesterday when I went through the the thing with the purple arrows. So what I was going to do today is put the ES on a 4 range and only trade the purple arrows. And wouldn't you know, the 2 purple arrows I triggered during the session this morning, I missed. But I did get a trade right here. I got 1 tick on that one. I had a break even on that. Missed the purple arrows in the middle of an NQ trade then. It says I got the blue arrow on this one, but I don't remember taking any profit on that trade. And I missed that purple arrow right there. I didn't mark down any profit anyway. I marked down just 1 tick profit. Then we get into the break, and it was a purple arrow here. Now you see how the ribbon was starting to compress in here. That's not exactly what you want right there. You want to have it spreading out or spread out, not compressing. Okay, when you get the purple arrow like this right here, you see how they're spreading out on that bounce and spreading out in here. That's what you want. So I tried to do just the purple arrows on a 4 tick range on the ES this morning. And if I would have done just the purple arrows, I would have been probably better off than I was overall. But I had other trades going on at that time, so I couldn't do it. All right, so the NQ is where we had the majority of our trades today. We had over 15 trades on the NQ. So let's go all the way back to the beginning here. All the way back to the beginning. Oops, a little bit more. There we are. All right. So here we are. Very first trade on the NQ was right here. We picked up 30 ticks on that one. 30 ticks on that one. 30 ticks on that one. So we're up to 90 pretty quick right there. We had this right here. I really messed this trade up. And I ended up minus 28 ticks on that trade altogether. I had the trade and I meant to go to break even, but I ended up screwing something up and I ended up negative 38 contracts. And then I ended up losing a point and a half or something like that with 38 contracts on, and it just ended up being a whole messed up thing. But I ended up losing 28 ticks on that. So it went from 90 down to 72 on that one. I missed all these black arrows and I grabbed this right here. Stopped me out again. I went down to 52. Didn't let it get me down though. We went up to 56 right here. We got 4 ticks. Went to 56. Had a blue arrow there. Then another 30 ticks right. 30 ticks? No, 20 ticks here got us to 76. Then 30 ticks here got us to 106. Then 30 ticks there got us to 136. 36 there got us to 166. And we didn't have a lesson plan today, so I didn't have all that time that I didn't actually trade. Went from 166 to 196 here, and we had more trades in here, I thought. And it went from 196 up to 204, then to 232 somewhere, and then from 204 up to 232, and then up to 235. So there's one arrow missing in here somewhere, but we had 30 ticks there, and just a few ticks there, and another one that we had just a couple of ticks on. Somewhere we ended up with 235 ticks on the NU. Now during break, there was a trade there, blue arrow trade there, blue arrow trade there, both worked out. Blue arrow trade here worked out, blue arrow trade here. The outer bands were flat, would not have done that one. Blue arrow trade there that worked out. This would have been a break even. This would have been a stop out. We have this current one right now that's going to put in a higher swing. It's still working. Okay, and that was the morning. We had a ton of trades this morning, especially on the NQ. All right, so let me open up YouTube here for a second. YouTube. It's just weird. YouTube. And now I want to click on this and see if anybody's asking any questions over there. All right, so I have YouTube wide open. If you have not taken a free trial lesson, you want to go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button and you'll be sent. You will be sent everything you need to be sent to this page right here. Actually, on this page, fill it out. Give us your first name, last name, email, phone number. Down here, give us your machine ID. Here, give us your TradingView login ID. Now, the TradingView login ID is this ID right here. If you hover over whatever this is for you, this is me logged in as CFRN right here. Whatever you're logged in as, when you hover over that, is what we need. All right, give us that ID, and we'll get you going. All right. That is how you take the free trial. All right. So the purple arrow, or the blue arrow, didn't put in a higher swing. So the green arrow doesn't really count. Now the green arrow should also put in a higher swing right here, but we'll wait for that to happen. I'm still looking to trade anything that bounces off the ribbon here that does not hit the black line on the pullback, okay, on the ES. And the Russell right now is in the ribbon right here. It's in the ribbon. We need to bounce up off of this. We've got a low here of 7.8, so we're going to have a high of 8.5, 7.8. I'm going to buy 8.5 on that right now. Here, I'll show it to you. That is what you do. If you know the bottom of the bar is, you know the top is going to be right there, given the information that we have right now. And it's moved down just to here. It's now got the low of the bar right here is 7.5. So I'll be buying that because the top of the bar will be right there at 8.2. All right. So if we get an up close, and this will be a valid trade on an up close because it hasn't hit the black line on the pullback. If it hits the black line, then we have to wait. Okay, but if it doesn't hit the black line, we don't have to wait. All right, I haven't opened up the question box yet, but I will right now open it up and take a look. There are no questions in there. And I don't believe we have any on YouTube either. Okay, so this is pulling way back now. The entry would be right here now, but I'm not going to leave that on. All right. I'm going to move that over. Now, see, this is a pullback in a bigger downtrend. All right. The reason I'm not going to leave that on is because it has to prove to me that it's going to be a trade first. Because right now, this is what the trend is, and this is a pullback. And so this little bit right here is a bounce during the pullback. And so the pullback should be limited to how far it's going to go up. So I want it to prove to me that it's going to actually be a trade. by proving it to me, this has to physically come out of the oversold, and this has to give us a green arrow. All right. If that happens, then I'll put the trade on. But until that happens, I will not put the trade on. And it didn't happen. You see, that's exactly why we have to wait in this kind of a situation. Now, had the thing been going down like this, if you had these green arrows right here, that one and that one, I would have had a sell stop limit order waiting on both of those. All right. Because you're in the bigger downtrend right here. You're in the stronger trend right here. This is the weak move. This is the strong move. So the strong move, I'll be proactive with my orders, with my green arrow orders. In the weak move, I won't be proactive with my green arrow orders. I hope that makes sense to you guys. Some people would just put a bias on and say, I'm only going to take trades in the strong move. This one. All right. This is your major move right here. This is your minor move right here. So what should happen is we should get another one of these from here down to here. This much from here down to here. You remember my diamond principle that I was talking about yesterday? It's all the same stuff, except the diamond would be going up something like this. This would be your top. Down like that, and up like that. Is about what the diamond would look like. The way it's spread out here. Okay. So right now we gotta wait. It's possible you could get a green arrow here still on an up close. It's possible you could get a green arrow. It looks pretty weak if you do. But the minimum that it should do on this right here, even though it's weak, it should still make it up to right here. Okay, I'm sorry, not right, yeah, well, right here. Let me, should be this one right here, the 50% marker right there. You just can't, the text is all mushed up, but it should make it up to right there, this level. Right there. Okay, so if I get rid of this, you'll see that level is still there. Now, the way it'll come together here, this is the Russell, so the way it'll come together, we might get an up close on this bar. It's going to low here 67.5, so it's going to have a high 68.2. If we get an up close, it'll be right here will be the up close. Next bar will begin at 68.3, and 68.8 would be 5 ticks. Now, did it pull it out of the oversold? It did over here, pulled it out of the oversold. But it did not give us a green arrow because the outer bands are flat. All right, now pulled up to this point right here. Did you guys understand why I drew that in there? Why I was saying that point right there? Because it was a retracement of this leg down. Overall, I'm still thinking we're in a downtrend right here. Okay, this is a retracement. This is a weak move. It's a weak up leg in the bigger down legs. And if it's going to fail, it'll probably fail right about here and then turn down. If it does put in a higher swing, then this is going to be a little bit stronger than I thought move, but I don't think it's going to. I think this is going to be a weak move right here. It's going to continue down from this spot. So we didn't end up with a trade setup here at all. Okay. But we have a blue arrow over there on the YM. We have a blue arrow over here on the NQ. Now, if we look at this, we can look at the same thing over here on this, okay, and on the NQ. Let's back this out. Okay. This is your strong leg. This is your weak leg. So this is your strong leg right here on the YM and on the NQ, I think. Let me back this out. We can look for it here on the NQ. That's so long. There's on both of them. There's the long there, and here's the long here. I'm going to throw this stop at break even and this stop at break even. Okay, so I'm going to lock in a minute 0.75. I'm going to lock in 12 ticks on that one, and I'm out with 12 on that one, and I'm going to lock in. I'm just going to go for 10 over here, 10 on that one. All right. Uh-oh. Oh, something screwed up in that. They just exit out of that. And I'm still in on this one. All right. So I got 10. That's the second time something screwed up on me. Oh, I know what it was. It hit my, I left the other target on up there. That's what it was. It hit the other target, so I ended up losing some money on that crap. I was doing too many things at once. I don't know what I ended up losing on the other target on that one, but I'll go back to it and figure it out. But we did get 10 there, and we did get the original 12 on this, and I'll go see what I ended up losing on the extra stuff that it did. It popped me back in. Hang on. Okay, go all the way up here to the top. And all the way down here at the bottom. NQ. So we lost 4 points of that. So we made 3, and then we lost 4 right after in the mistake that I did right there. So I ended up losing 1 point overall on that. And we gained 10 ticks over here. So that's my second mistake like that today. I should not trade when I'm sick. It's my second mistake. Well, actually, I mean, overall, I had a really great day. The markets have been really well. I have really, really tradable markets today. We've had great moves most of the day. And that one there would have given me 30 ticks in profit. What happened on that is I locked in the 12, and it took me out to 12, but that was a separate order that I put on. So the original order never got deleted. So I had my original target up there, and it went in and hit my original target. And at that point, it was sold at my original target. At that point, I was flat. So it entered me short up there at my original target at plus 30 ticks, and then it went 4 ticks into profit after that, or 4 ticks into loss after that, 4 points into loss after that. 16 ticks. That's what happened. And that kind of happened to me earlier today, too. It was on the NQ earlier today, too. That one trade that I told you I messed up earlier. It's back here somewhere. This one, right here. Similar thing happened. This was even more mixed up. If the strategies were working, and the strategies are not working properly, but if they were working properly, then that wouldn't have been an issue. Twice today. But it's my fault. I need to get my head back in the game as far as not using strategies anymore. All right, so what we're having right here, we're gonna have a black arrow. Now, if this pulls back to like right here, I'll take the trade. All right, if it pulls back like 46.5. All right, now I won't. It's gone enough into profit to move the stop to break even, so I won't do that now. But if it would have done it originally, pulled back to 46.5 right here, I would have been willing to take that risk. Okay, if it would have just come back quickly and pulled to 46.5, I had to take in that, because then if it pulled back and it hit the ribbon, it just bounced off the ribbon. You'd gotten a blue arrow long off the ribbon, like we might get right here. And I'd still been in the trade, but it went too far into profit right here from the black arrow for me to want to stay in that. That's sort of a situation. Now we could get a blue arrow long from right here, and I'll take that. If we do get it, it'd be up at 47.25 right now. 47.25, I think still. Yeah, 47.25, and there it should be right there, and there it is, and it didn't fill me yet, so I'm gonna get a better entry right here. Nope, I didn't get a better entry. It's still filling me at 47.25. Okay. I tried to get a better entry, but it slipped me 3 ticks. Make sure my stop's in the right place. It looks to be. And 8 ticks in profit. Stop goes to break even. So we want to get a full 30 ticks on this. It just took me out of break even, but we want to get a full 30 ticks on that. It should go the full 30 ticks and get up to the prior swing high. That times it was 115. One thing I haven't done in a little while, I haven't done it in this session anyway, is look at the bigger picture stuff. Right? I know Dwayne was looking at it, and I was saying in partners meeting last night that I didn't know if we were going to have any more momentum from the news today. I didn't know if the news today was going to give us anything else, because we had so much movement from yesterday. It really didn't. None of the markets really gave any movement. The Russell is the only one that really hasn't had a huge retracement yet. Okay. We did get all the way down to the BBC, which is what happens after the black step line pulls under the MA1. So this bounce off the BBC right here is normal. Now, Dwayne might have gone over this already with you. did, well, then you get to hear it twice. But what's happening right now, if you look at this, this is working out just about perfect. You see what's happening right now is you should get a push back up to the 50% retracement of today's action, which would put you right there at the BBC. And it should find resistance at the BBC and 50% retracement of today's action. That's what should be happening right now. You should see it getting right up here. Okay. We never got that pullback. This is the one market that never did the pullback. Remember yesterday I said it was going to chop around in this and then get out of it? It's pretty much chopped around right under that the whole day. And on the YM, I drew this circle for the pullback spot. It bounced off of that circle and went up. And the NQ, I drew that spot right there. It's just about getting up there right now. It's just about getting up there right now. If we move that circle all the way over, you can see the bottom of the circle where the red line is. I guess if I do this, just drag from the bottom of the circle over here, like that. We are right there now, where I thought we were going to pull back up to. And so what does that mean for what we got going on right now? Well, with the NQ, if this candle, what time is it? 1:17 in 13 minutes. If this candle somehow closes down and pulls this black step line underneath the MA1, then price is going to drop down here. Now, it may take a couple of candles to do that, and at that point, this will probably be pretty close to the weekly trading zone. So I would think right over here somewhere is where that would end up. Okay, that's what that should do. The YM, we had this bounce here. It hasn't had a good retracement yet today, in today's action. So I would think once we get it, I'm going to go from right here, which is just today's action, starting at the news. That would put it here. Now, the black step line has to get below the MA1 for it to pull back down to the BBC. The BBC at that point will probably move up to the 50% retracement level right here. Okay. All right. Those are all my thoughts on these markets. So I do the NQ too. I did the NQ. I did the YM. I did the, well, the ES. I was thinking it's going to retrace back down to here, which is also perfect. In today's action, right? A 50% retracement will put it right down here at the BBC. And that, to make that happen, this bar is going to get bearish. Things have to get pretty bearish right here. This resistance that it found over here before, it's going to find it again. Get that black step line below the MA1. If we do get a bearish move right here, and this gets down below the MA1, then that's where we should close out the day right there. If we don't, then it's probably going to go up to the weekly trading zone. Sorry for the pause. I was waiting for the sneeze. You know, when you're just about to sneeze, and you got to look around and try to find some light, like the sun or something. That's what I was just doing. All right. So there's my analysis for where the market should probably go today. This one should go up to right there. All the other ones, if they start to weaken, I've given you where they should go to if they start to weaken. Okay, I didn't give you anything on the upside, but just the weekly trading zone up above is probably what you got to look at for the upside. All right, now this blue arrow back here never gave us a higher swing, so this green arrow is meaningless. We didn't get any pullbacks to test the ribbon here yet on the ES4 range. And we don't really have anything going on over here either. Okay. All right. Does anybody have any questions about anything? Anybody? Anything? Over here on YouTube, and I see there's a bunch of people watching, but I don't see anybody asking any questions. All right. We need to get a higher swing here, get out of the no trade zone to get a trade. Over here on the YM, we do have a higher swing. We need to pull back. Same thing with the Russell, same thing with the ES. Now the ES, the one good thing about the ES today is that it's been doing the support, the supply and demand in the DOM has been working out really well all day today. Like the ES is going to go up to right here. Okay. 94.75, I think is where it was. And that's what all these lines were down here. As price was advancing all through here today, the DOM was showing where it was going to go. Like back here, the DOM was showing where it was going to go. It was going to go up there. So we had an opportunity. We got up there. In here, I don't know where these came from exactly, but the DOM was showing us the whole time where price was going to go, and price kept going there. Whenever it did show us that, like I just gave you that number a minute ago, and we're up there right now. The ES has been really good about that today, accurately showing supply and demand within the DOM. The number right now is 695. 695.
Michael, did you catch the question in YouTube?
I did not.
Okay, Michael, how do you determine what size range bar to use?
Roger, the way I determine that is the amount of risk that you want. You know, what are you comfortable with your stop? You know, do you want to risk $100 a contract? Do you want to risk $200 a contract? How many trades do you want to take? It depends who you are as a trader, what the market is really. You gotta have a market that's got volatility. If you're gonna have a larger bar size, you gotta have a market that's got good volatility. Now, the reason I choose the 7 range on these right here, and the reason I have a 15 on this, is because it keeps the stops small. Right? Like these stops right here are only 50 a piece. This stop is 125, and this stop is 100. So it keeps the stop small, and we get great indications with, and it's tradable. You know, it's not too fast that you can't trade it. The NQ on a 7 range just jumps around too fast. It's too much slippage, it's too much. It jumps around too fast. I couldn't do that on a 7 range. But if I double it, just about, make it a 15 range, then that is something you can work with. Now, originally, you know how this is on a 4 range right now? So on a 4 range, you know, the stop is only 8 ticks, so the stop is $100. Now, we have it on a 7 range, so the stop is 10 ticks, and then all of that is right in here. You go to mytradingiq.com, go to trade rules. I have it broken down right here for the different range bars, what the stop should be, right, and when you should trail it to break even. That's for the markets that we use. That's how you should do it for the markets that we use. Okay. And that includes gold and crude oil. If you're going to go to something else like bonds, then you're going to go down to like a 2-tick range sometimes, and you might only have a 4-tick stop. It depends which bond though. The 10-year bond, you can still use 4 range or maybe a 7 range on those, but the ZB, the 30-year bond, those don't move at all. They don't have any volatility. So I guess there's a couple of things that go into it. One is how volatile is the market. You know, the more volatile, the bigger the range you need. And 2 is how much risk do you want? How much are you comfortable having on a trade? You know, there's a market out there for you that's got the right volatility. It's got the right volatility and risk mix. You just got to find the market that is right for you. You know, when you hear Bert say that, Bert's our broker, and you hear him say that oftentimes, you know, find the market that you're comfortable with. You're going to find a market that just suits you. If you look around and you find the market that's got enough volatility for you to have the range, the size range bar that is going to allow you to have the size stop, that you're comfortable taking trade after trade after trade after trade, even if you stop out 2 or 3 times in a row. Okay. You're still going to be confident taking the trade after trade after trade on that. No, though you should not stop out 2 or 3 times in a row in the same market in the same direction ever. Okay, twice in a row in the same market in the same direction is one too many. And if you do that, you've probably done something wrong.
And we do teach you in one-on-one mentoring sessions how to avoid that and how to fix that problem if it does become a problem for you.
Yes.
And all of our members get access to one-on-one mentoring, all of our passport holders, at no additional charge.
Mm-hmm. Oh, what he said. It is all true. So, Roger, I don't know if you're still watching right now. Okay. You are. Good. Okay, so the questions go from top to bottom, not bottom to top. That's good. So over here, like right now on the NQ, I went to the 4 range. If you look at the spreadsheet, Roger, the spreadsheet, this goes back over 10 years. And from 2013, where it begins, up to 2023, all the results are on a 4-tick range. Right, they're all on a 4-tick range. If you go back to 2022, which was our best year ever in the spreadsheet, 2022. I think right here, we ended 2022 with $238,558 per contract in the room in the morning. And that was on a 4-tick range. That was before we went to TradingView, and it was on a 4-tick range. It was before we really traded the NQ also. See, we hardly ever traded the NQ. It was mostly trading gold, crude, and the ES. And we averaged on the year, our daily average was almost $1,000 per contract. But when it got too volatile, that's why we had to change to when the Ukraine thing happened and it got really volatile, we had to change. It was just impossible to try to do it on a 4-tick range. But now the markets have settled down some. You see, I switched the ES back to a 4-tick range because the last week I've only had 2 ES trades on a 7-tick range that I actually was able to take. There were more, but I was only able to take 2. And I was also doing an exercise showing the purple arrow. How the purple arrow is a great arrow when you just, if the ribbon spread and you get a purple arrow, then it's a great indication. But yesterday we had a bunch of them. Today we only had 2. They're in the room. And I missed both of them. I was in other trades and I missed both of them.
The good news is you only need 1.
Yeah, either one of those could have given you a goal for the day. Okay. I've got a nice blue arrow right there that I missed. See, now this black arrow right here, you see, if that would have pulled back, I would have been looking on that one to try to enter halfway back. Because if it would have pulled back from there and given us a blue arrow off the ribbon, we'd have been at a better entry point off the ribbon right there. And we still had a long way to go to get to the swing high. But as things turned out, we didn't get the pullback at all on that one, and that was unwanted anyway. Same thing with this one right here. If it pulled back, it would have to be a pretty deep pullback on this one because the swing high was pretty close. But every time you get a trade, you expect it's going to exceed that. My diamond principle. My diamond principle. I'll draw it for you again. Okay, here's your diamond. All right. Here's your trade. Here's your pullback. The pullback pulls back this far, and it should snap it in equal direction in the opposite side of the break-even point. Okay, that's what should happen, and that's what typically does happen. When you get a pullback, the pullback is usually going to be, I like to see a 50% pullback of the leg up, and then it should do the same leg up again. All right, so if the diamond principle is intact and you're in a good trend, then this is what should happen. All right, as it moves up, it should keep doing the same thing. And from here, it should go up to here. And from here, Should go up to here. Right? That's my diamond principle. How do I patent a term like that?
You would copyright it.
Copyright.
And I'll explain it. I'll send you a message in a Telegram, explain it to you.
Okay.
Now, everything Michael just said about the market continuing to climb is absolutely 100% true until it reaches a point where no one is willing to pay one tick more. And
Yes.
that becomes resistance. And that can happen at any point. But we always assume that the trend will continue until it obviously ends, like on the ES right now. Okay, we've had 2 candles in a row that were not able to break through that little dotted line. Let's see if this one can do it. If so, then we've got a continuation of the trend. So then we just got to wait for a pullback, and boom.
You know, all the things that we teach all the time, they all come into play. Like on Wednesday's lesson plan, day 3 of the lesson plan is one of my favorites, where I go over the leg lengths. Because with the leg lengths, you can see when the market is starting to weaken. It's in true price action right in front of you in real time. You can see when the market is starting to weaken. You see when the pullbacks get bigger and the legs up get smaller. You know the market is weak. Like right there, it just showed good strength right there. Now the pullback should be small right here, because we just showed good strength right there. The pullback should be relatively small, probably pull back to right here and then get a bounce. And then the bounce should be this big. Okay. That's the way the markets always work. They always work the same way. So everything I was just saying with the whole diamond principle, I mean, it just worked again and again and again right there. Okay, again and again and again. Here's your, I'm going to get the pen to show you. Let me draw it. Here's your pullback. Here's your leg up. That's the snap right there. The snap went up to here. That's what you should expect. You got that. You got your pullback. You snap again. Your snap should go up to here. Is what you would expect, something like that, right? To satisfy that one. You got that. So here's your pullback. This, I was just saying, you should have a small pullback right here. Small pullback. Then you're going to have your snap again. And the leg lengths here are, you know, they're this big. Well, they're even a little, well, this one's a little smaller than this one. And this one's a little smaller than that one. But the leg lengths are actually getting a little smaller here. But this one right here, as we snap up, if it does an equal snap up like that, exceeds the prior swing high like it should, then you know you're in a good trend, and you know you can expect more trades. Eventually, you're not going to get a trade though that's going to exceed the prior swing high. When it stops getting up to the midpoint, when it stops getting up to your break-even level, to the midpoint right here, when it stops exceeding the swing high in the diamond, no, not the swing high in the diamond, but the midpoint in the diamond, when it stops exceeding that, then your trend is over. It's going to change. It's going to start doing it on the other side, right? It'll pull back like that. It'll snap down like that. That's the way that it works. That's the way that the markets have always worked. And you know, if you in day 3 of the lesson plan, where we do leg lengths, so you can see this stuff happening in real time. Like right now, we didn't have a very deep pullback, which is what I was thinking, because we had a big strong move right there. But we didn't get up above the prior swing high either. We don't have a trade set up. There's no trade set up here until this gets down into the oversold or this gets into the ribbon. One of those two things has to happen for us to get another trade. The way it worked out, you would have had a trade right here. You would have had a black arrow right here on the ES, right, which I would not have taken. If I put them all on, you know, right now I put all the arrows on, you'll see a black arrow is going to be right there. Right there. Okay. Which I would not have taken right there. It's too close to the swing high, right? So this one right here, you see it's trying to put in the swing high right here. This has got just a little bit of room to go up right now to finish that leg. But if you come over here and you look at this leg length, right here, there's your leg length, right? So to repeat that leg length, we're up here repeating that leg length right now. So now that we've repeated it and exceeded it, this is where it should go. Okay. It didn't give us a chance on the pullback here to get into it again, but it's showing strength. Now, I said a minute ago that because of the strength that it showed right here, it should have a small pullback, which is about 50% of this leg up, which is about right here where it did. And now if it does the same leg length up, it'll get up to here. I'd really want to see it now that we've exceeded the swing high, I want to see a pullback and goes a deeper pullback, like 50% retracement of this whole leg right here would be better for the next leg. If we had a pullback to here, that would be better for the next leg. And what I mean by that is we'd keep the structure in the market. Okay. If it extends this leg up to here, it's going to kind of break things in the market. Because then if it does a 50% pullback with that big move up, it might get too far into the ribbon and you probably won't get any more trade setups. Okay. I mean, I'm talking for me, and this is my own selfish thing because I know what makes the arrows come up when the arrows come up and all that stuff. And if it extends too far, it's going to pull back too deep to give us any arrows to give us a good trigger for a trade. So, we just have to trade what's in front of us. But that's what I think. All right, I just ran 7 minutes over in that whole description. I feel like crap. I'm surprised I went through that much. Anyway, I got down a rabbit hole. That was a good rabbit hole, though, wasn't it?
It was very good. I want to share something with you real quick that you didn't catch at the beginning of the broadcast. The FCC is investigating a massive hack of AT&T Incorporated customer data. Now, they didn't just get the names and phone numbers of people or their email addresses. What they got were records of calls and texts from nearly every one of their mobile phone users for a 6-month period in 2022, one of the biggest breaches of private communications data in recent memory.
Wow.
If AT&T cannot protect their data, how are you and I supposed to protect ours?
That is crazy. That is crazy.
Anyway, I already ranted about it earlier, so I don't need to rant again.
Okay.
All
It's
right.
doing all that extended move right here. Oops, I'm sorry. This isn't doing it. I'm sorry. The NQ is doing the extended move. Now that's the way the NQ is right here. What I was just talking about over here, when it does the pullback on the NQ of this 50% retracement pullback on the NQ is going to put it right here. That's not going to be too bad because the ribbon's going to move up as it retraces. So it'll be right there at the ribbon. This one, I'm not sure that's going to be the case. Anyway, we can pass it back up to Fabulous.
Did you already show them how to take the free trial?
Oh, I don't think I did. Okay, let me show you how to take the free trial. If you haven't taken a free trial, let's go here to mytradingiq.com and click on the purple button right here. When you click on that purple button, you are going to be brought to this registration page. There is no credit card required for the trial. Just give us your first name, your last name, your email, your phone number. These are all just little drop downs. And down here at the bottom, it gives you machine ID, if you have one for Ninja Trader, and it gives you TradingView login ID. Now, if you do have a Ninja Trader machine ID and you trade on Ninja Trader and use Ninja Charts, that's fine. You should get the free trial at TradingView anyway, because there's stuff that we have in TradingView that we don't have in Ninja Trader.
By TradingView login ID, he's not asking for your username and password. He's just asking for your username so that we can turn on the indicators for you. Yeah, see what he's doing right now, how it's popping up? He's logged in as CFRN. That's what we need to know. That's all we need to know. We don't need your password or your mother's maiden name. But that will enable us to enable your indicators so that you can fully experience everything the trial has to offer.
Yeah. And that whole thing you were just saying about AT&T, we don't want any of that information.
No.
We don't want to have to be responsible for your information. We don't want your credit card information. We don't want any of that. That's out of our hands. It's a third-party thing.
Yeah, in fact, if you decide to become a member, you will pay through a third party. You won't pay directly to us because, again, we don't want that responsibility on our back.
Yes, we do not need that, want that. All right. Yeah, what you were saying, if AT&T can't protect it, how could we possibly think we could?
Right.
All right. Well, I guess that's it, D. With that, I can pass it back out to you at Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park.
Okay, recap of the morning session.
Today it took 7 minutes and 1 trade to get to $1,900.
What a sweet way to end the week.
It was a really good end to the week for me.
And I really hope you feel better, buddy.
No, thank you. Me too. I'm sure I will. We just had a great blue arrow trade right there on the NQ.
And the NQ is where we left off, guys, and we just sliced through a weekly trading zone. Now, typically what will happen is once this move runs out of steam, we'll retrace back to the zone we sliced through and then continue in the direction of the slice. And if we should get through this next zone, got a bearish cross right here, that is high probability resistance. So here's where we opened on the NQ last night. We had support below us. We were just kind of walking along the CFMA1. I refer to it as red and falling, blue and climbing, because one is bearish, one is bullish. But you see how we consolidated? Remember, 60% of the time when price encounters a weekly zone, we're going to get consolidation. Okay, so we did. Then, perfect stack. Price, step line, blue and climbing, BBC. Now, we spiked the zone, but then we pull back. And then the next candle went through. So that's really consolidation. That's not really a slice. But if you wanted to call it a slice, what happened? When it ran out of steam, it came right back to the zone it sliced through. Now it's slicing through another zone. Very bullish market. But here's another spot that you should expect to run into resistance. 27.26. What was the high of this candle? Yeah, 20. So to be safe, make it 27.20. Okay. Expect resistance there. Now, these are very bullish markets. It may plow through it. Be on the safe side. Okay. So we hit the short target. We hit the long target. Resistance always sends the market looking for support. When price drops to a weekly zone, we expect support till proven otherwise. And now, support has sent us looking for resistance. On the 30-minute chart, we went right through that zone. Let's see if we're going to go right through this resistance. We'll give it a minute. And I got to jump. Come on, show us what you got. All right. See what I'll do. We'll come back and take a look in a minute. Crude. We opened right at a weekly zone. We ran up to blue and climbing. When blue and climbing gets directly above price, it becomes resistance. It sent us down to support at the BBC. Support sent us up to resistance at red and falling. Resistance sent us down to support at the BBC and the weekly trading zone. And that launched us all the way up to the long target. We then pulled back to the BBC, bounced to red and falling, pulled back to support, bounced to resistance. Then this red and falling got us back below the BBC, and we came right down to the zone. The zone's 8230/35. 8230/ the low of this candle. 36. Okay, so we missed it by one tick. But we bounced into resistance at red and falling and the zone. And pretty as you please, we came right down to the zone. These are the zones that were published Monday morning at 6:15 a.m. Eastern. Remember, once the zones are published, they're carved in stone for the entire week. They do not change. Once you fully understand how price behaves at and near a weekly trading zone, zones will become one of the most important tools in your trading toolbox. Gold. We opened, price was trapped, resistance overhead, red and falling, support below, BBC, red and falling one out, got us below the zone. We pulled up to the BBC. Remember, the pullback holds more often than not, and that sent us right down to the short target. That support sent us back to resistance. which sent us back to support, which now has us looking for resistance. And right here, 2424.3. You can see the market's already consolidating sideways ahead of that resistance. And your step line is attempting to cross blue and climbing. When that happens, you should anticipate a retracement to the BBC. Pullback holes more often than not. Silver. We opened. The vertical lines separate today, Friday, from Thursday, from Wednesday. So yesterday, we hit the high resistance. On the high of the day was the resistance, or the zone. So last night, we get below the BBC and bang, we hit the target. It only takes 2 pennies. So from 57 to 55, 2 pennies. That's $100 per contract traded. Support bounced us up to the BBC in red and falling, both resistance. That sent us all the way down to the zone, which we expect to be support, so proven otherwise. Support will always send the market looking for resistance. Pullback holes more often than not. Resistance sent us down, and this time we traded through the zone, and we pulled back up a little bit, but we didn't pull all the way back to the zone. But we got a leg and a retracement and a leg. Where'd the market find support? At the zone. The zone bounced us back up to resistance. We got above the BBC. We got a leg, a retracement, a leg, a retracement. The step line is now about to cross blue and climbing. So my suggestion would be, if price drops back to 3104, trade it to 3102, and go home with a big smile on your face for the week. Euro. Here's where we opened, ran right up to the zone, consolidated, resistance. Resistance always sends us to support. Support always sends us to resistance. Resistance sends us to support. And then, bang, target. Now, here's an interesting one. Step line crossed, so we should be pulling back to the BBC. But notice blue and climbing is directly above price. So now that's potential resistance. Now, some might say, well, if you think price is going to pull back to the BBC, why don't you just trade short? In the Logic 247 channel, there's over 17,000 individual handcrafted alerts. Every one of them is a trend trade as defined by the 30-minute chart, price, and the BBC. There's nothing wrong with counter trend trading, but trend trading has a higher probability with lower risk. So I'm going to teach you how to trade with the trend, and once you master that, if you want to counter trend trade, then by all means. It's not illegal, immoral, or fattening. Just remember, it doesn't have the same high probability, low risk characteristics of a trend trade. Okay, so that covers everything. We said we'd pop back and look at the NQ. Oh, it poked through. It did. It's trying to fight its way through it. This is a very bullish market. Still cooking. Okay, now it could spike it and then quickly reverse. So you want to be careful. Let price get up to like 2765. From 2765 to 2785. That would be 20 points at $20 a point. That would be $400 per contract traded. from where my horizontal line is to the zone, that's a trade I would take, and it would be worth $400 per contract traded. If you've earned the right to trade 10 contracts, $4 grand. Okay. One last look at the daily chart. Man, did we just put in a new all-time historic high? We did. By one tick. I'm not going to change this today. I'm going to wait till Monday. Okay. But know that we've put in a new all-time historic high by one tick. Now, if that's all we do is put in a one tick higher high, be really careful Sunday night, because the market might drop like a rock. If it continues, on up, then who knows where it's going to end up. Trees don't grow to the sky, and the market doesn't rise forever. Okay? Not trying to be a doomsday prophet, but telling you that unless we increase by more than one tick by the end of the session, there's going to be some trouble for the market Sunday night. Now, not for us futures traders, because we can be long, short, long again, all in the same hour if that's what the chart tells us to do. For investors, if you're long the market right now with individual stocks, I'd be talking to my broker, my financial planner. I'd be making some kind of contingency plans. What are you going to do if the market collapses? I'm not saying you should sell everything. Maybe you're only 25 years old. So you got 20, 30 years for things to come back, right? And you could even dollar cost average. Talk to a licensed professional. I'm not a licensed professional. I'm just some guy on the internet that likes to trade and enjoys teaching other people how to trade. But I'll give you the phone number of a licensed investment professional. He's been a good friend of ours, since 2008. His name is Burt, B-U-R-T. His phone number is 866-928-3310. And when I close out the broadcast and play the disclaimer, you'll hear his phone number in there again. 866-928-3310. Now, when you call, he's going to answer the phone. Not some assistant, not some secretary. See, he's not just a broker, but he's also a trader. And he uses our strategy, our methodology, and our indicators. So he speaks the same language as we do. Like I said, we've been with him since 2008. Now, whether you open an account with him or not is not important to us, because we don't get any kind of commission, kickback, or whatever. I don't even think we get brownie points. But we trust him, and we know that you can trust him. Call him. He'll be happy to talk. Just say, hey, this guy was ranting and raving about you on the internet today on the CFRN broadcast. I'm with this company, and this is what they're charging me in commissions, and I don't know. Dwayne said I should call you, so here I am. And he'll be happy to talk to you. He'll even log in and do like a go-to meeting with you, and show you some things with charts and whatnot. But here's what he won't do. He will not pressure you to open an account. You'll have to tell him, dude, I think I like you, and I would like to open an account with you. No high pressure. No pressure at all. So, 866-928-3310. Now, if you want to call us, see, that's a separate company. StoneX. We're CFRN. You can call us at 949-42-EMINI. You can visit one of our several sites. I recommend mytradingiq.com. That's where you sign up for the free trial. You can email us anytime, support@cfrn.net. 9 out of 10 new traders fail, I'm sad to say. Why? Because they don't have anyone to teach them how to trade. That's why we have a live training room, 2 hours every trading day. From 9:30 a.m. to 11:30 a.m. Eastern. As a passport holder, you not only have access to the live training room, but you also have access to one-on-one private mentoring at no extra charge. The strategy you learn and the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter because, as I explained earlier and showed you earlier, price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. Why have you not heard this anywhere else? Because everybody else has a million different things to upsell you. We don't. We got the passport. It's the whole enchilada. As a passport holder, you'll also get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, be able to attend the members-only workshop on Thursday night, and when you become a passport holder, you get the golden key that opens a lot of private channels in Telegram. Now, the members-only workshop we had last night, guess where it is now? It's in the vault in Telegram. And when you become a passport holder, you'll be given the key to open that vault. And if you want, you can watch years of members-only workshops. Do you need to? No. But isn't it an awesome resource to have at your fingertips? I think so. Everything a trader needs, all under one roof, one low price. Don't put it off. Go to mytradingiq.com. Let's wrap this up with our good word for today. And yesterday we talked about learning to control your anger. Now, I started telling this story earlier and I got sidetracked, as I so often do. Me and Joe. Anyway, my wife and I were going out for a nice dinner at In-N-Out Burger. She really likes it there because she's on that diet where you just eat the meat, whatever. Anyway, she was driving. I decided to check my email. And I was getting email after email after email about this. My account at this company, somebody tried to hack it. And again and again. It was like 4 in a row. And I started to get angry. After I preached to you yesterday about learning to control your anger, I got angrier and angrier and angrier. And guess what my wife did? Did she talk me down? No, you see, anger is like a virus. It's like cancer. It spreads. She got angry. She got angry because I was angry, ruining our night out together. So what started out as a great evening, let's just say she didn't even eat her dinner. And do you know how bad that made me feel? I mean, my complaint, my beef was legitimate. But did getting angry about it solve anything? No, it just made things worse. A good word for today is seek God for direction. Proverbs 16:3. Commit to the Lord whatever you do, and He will establish your plans. How many of us go to God and say, hey, God, I got this great plan. Will you bless it? Do it the other way. Commit yourself to the Lord and let Him give you a plan. I've done it both ways, and I know which way works best. As a follower of Jesus, your direction shouldn't come from people and be confirmed by God. It should come from God and be confirmed by people. The Bible says, the preparations of the heart belong to man, but the answer of the tongue is from the Lord. All the ways of a man are pure in his own eyes, but the Lord weighs the spirits. Commit your works to the Lord, and your thoughts will be established. The Lord has made all for Himself. Proverbs 16, 1-4. You may be able to do what someone else has done and maybe even do it better. But has God called you to do that particular thing? Before you follow someone else's guidance, do these things. 1. Check the source of their wisdom. For the Lord gives wisdom. From His mouth come knowledge and understanding. He stores up success for the upright. He is a shield for those who live with integrity, so that He may guard the paths of justice and protect the way of His faithful followers. Then you will understand righteousness, justice, and integrity, every good path. Proverbs 2, 6-9. Number 2, check their motives. John writes in Revelation 20, verse 12, I saw the dead, small and great, standing before God, and the books were open. Will one of those be the book of motives? And if it is, will your actions and accomplishments stand up under divine scrutiny? Now, what are we talking about here? Okay. If you do some good deed so that you get an award at the Rotary Club and everybody applauds and pats you on the back because you're such a fine fella, God can't use that. Not only must your deeds be pure, but the motive behind the deed must be pure. You build an orphanage because you want to help starving children, not because you want to get some kind of award or whatever here in America. And I'm not patting myself on the back. My wife and I were too ignorant to know better. And when God spoke to us 24 years ago to build an orphanage in a land we had never even been to, we prayed, we slept on it, we prayed, and we started writing checks. And because it was God's will, not our will, 24 years later, children go to bed every night with a full stomach, knowing that they are loved and that God loves them, and they're getting an education, and they're in good health. Now, just because that was what God's will was for my wife and I, see, don't try to copy that. Go to God and find out what His purpose is for you. It may be something far greater. Number 3, check the outcome they're pursuing. If you seek success to have power and prestige, or seek riches only to have comfort, you violate one of the core principles of God's Word. You're blessed to be a blessing to others. I'm going to say that again. God doesn't bless you just because you're a fine fellow. God blesses you so that you can bless other people. Don't you forget it. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.